CNBC Changemakers on our annual list spotlighting women whose accomplishments have left an indelible mark on the business world. Ms. Brown, welcome. Good to have you with us.
Thank you.
And congratulations on being a change maker, which I know is a title you have justly earned. Let's go back to what Don Peebles said there, predicting a catastrophic effect on commercial real estate. I think he's speaking mostly of office buildings. If interest rates don't come down, and that catastrophic effect will ripple through to banks just like yours. How do you answer him?
Yeah. Well, I can't speak to the larger banking industry or even the effect that it will have on all mid-sized banks, but I do think it's important that banks are well positioned in this environment. And for us, it means even prior to the Silicon Valley Bank problems that you mentioned about last year, we have positioned ourselves to thrive whether interest rates are going up or down. And one of the ways we do that, obviously, is to maintain high liquidity. In our case, more than double what is required for satisfying our most risky depositors.
How exposed is your bank to the kinds of commercial real estate companies or properties that Don is referring to?
Yeah, Don is talking, I agree with you, he's probably talking mostly about office real estate. And in our case, it's really important for us to have a minimal amount. And we have 6 serious size loans in metropolitan areas of office-only real estate. Together, they make up something under $60 million. So it's not, for us, a very significant problem. But again, that goes to speaking to the responsibility we all have when you have a consumer and, in our case, a change maker customer base. It's important to have a very conservative and responsible portfolio.
I want to get to some of the history of your bank and what it stands for in just a moment.
Sure.
But if you wouldn't mind, walk us through some of the relative numbers in your bank, deposits and deposit growth over the past year, net interest margin, with a particular viewpoint towards what higher interest rates mean for you to have and keep more deposits. Right now, you have to pay a little more for those deposits.
Well, we have a unique business model. It's really difficult to talk about it without talking about our clients because we're so client-centered. What's unique about us is that we are in 2 areas which are actually growing in deposits and slated to continue to grow. And they happen to also be areas where we do well while doing good. And that is, for example, political deposits. The political cycles have lengthened, as you know, significantly. Doesn't matter which side of the aisle you support, that's the case. For us, that means that our deposits, since we are if not the largest political bank, that means that our deposits have a different level of stickiness. We also support and have as clients unions, and they are core depositors for us. We talk about our super core deposits, which are those which have an average life of 17 years. That's over half of our depositors. That's a significant amount of the bank's value. We are, by the way, a bank of $8 billion in deposits, $54 billion or so in trust assets as well, and that number is continuing to climb. But of note, we are, again, in areas where there will be growth in deposits over time. Another example of that are sustainability deposits. We bank everybody from the Sierra Club on down, every type of sustainability organization you can imagine, in addition to the deposits that we receive from unions and from socially responsible organizations, including entrepreneurs who are socially responsible as well. Those deposits, again, are sticky not just because we are a large full-service bank that offers all the products they're used to, but they're also sticky because those customers care where their money sleeps at night, and they care that the bank that they bank with is values-based.